Hello, Big Trends traders. This is Price Headley with your FANG Options Trader product review. Want to overview what the FANG names are all about and how we take advantage of that with options. Before I get into it, just a reminder that everything that I'm sharing with you here is for your information and education only. Nothing we talk about here should be considered a specific recommendation to buy or sell any particular investment. And of course, you know that you are 100% responsible for your own investment decisions. Big Trends and the staff are not responsible for any trades you choose to make. And not all Big Trends products and services are appropriate for all traders and investors. As we trade these FANG stock options, though they can be more volatile. So we're going to show you how we look to manage that volatility and harness it. Big Trends doesn't provide any personalized financial tax or legal advice to any one individual. What we do is we send our new FANG options trades out in real time via email and also text alerts to your smartphone. And then you decide how you best want to use it. Also, make sure you consult your tax advisor before you make any investment that might impact your unique tax situation. So if you're new to this concept of what are FANG stocks, I'll tell you about that and how I leverage those FANG names with weekly options. One in particular, I love weeklies on the higher dollar stocks. And my number one indicator to show you with some case studies today on the FANG names to really model success and define the quick trends. These are trends that can often happen in a matter of a couple of days, give or take. So we want to take advantage of it. What are the FANG names? The traditional FANG names: F is for Facebook, A is for Amazon, N is for Netflix, G is for Google, now renamed itself parent company Alphabet. Don't ask me why, but also we throw a bonus one in with Apple. And so bottom line is that you see that there's kind of a big five technology oriented companies, but also I would call them kind of disruptors of traditional media. In the case of Netflix with binge worthy content, of course, traditional retail channels have been upended by Amazon in their quest for retail domination across just about every category. Facebook, of course, created a whole new category of social media, Google with paid search, and Apple with just in general the iPhone. So much power at your fingertips with your phone. The tools we use for trading in our trade funnel across multiple platforms. You don't have to have any one platform to take advantage of this. We call out the trade alerts. I'll show you a trade alert sample in a little bit, but we're going to focus today on the ADX indicator, the average directional movement. We use it with some filters here. Wells Wilder developed it, and then all these create what we call our trade funnel. So what's the ADX all about? The green line here in this bottom panel is the ADX. The ADX shows you when you are getting into a trend, ADX is rising. If ADX is going down, it's non-trending. So what we're looking for is a very distinct pattern where ADX actually rises above this declining, in this case, negative directional movement. The positive directional movement's rising. That means you're making new highs. You're getting less negative directional movement in red. That also means you're making higher lows. That's the definition of an uptrend, right? When those things cross, we're saying it's time to get on board and take advantage of this. New subscribers to the FANG Options Trader Service get all of our settings for ADX and the indicators so you can take advantage of this. We also use a moving average filter to help define which side of the trend we want to be on and when we don't want to fight that longer term trend. That's in red with the moving average line there. The exit point happens as the ADX rolls over. You can see one of the strengths of ADX is that even when you go through sort of consolidating flat periods here, you can still take advantage of the fact that it'll still be rising, and then when it does indeed roll over, we say we're out. Now, sometimes the stock will keep going up. Facebook did in this case before it came back down sharply a few days later. But bottom line is that we're just trying to catch that sweet spot. That trade led to a 57% gain over just a couple of trading days, and on the 2nd, out on the 4th of January. And so we'll go into more case studies, but if you're new to the concept of weekly options, it used to be the third Friday of every month was the monthly options expiration date, and that's all you had available. But now every single Friday, options are listed to expire the next Friday, and the FANG names already have them out there. So instead of just one week a month that we could trade this strategy, now every single day we can trade this strategy focusing on the next week's expiration. So in this case, we can take advantage of really leveraging those higher dollar FANG stocks with weekly options at reasonable premiums, and we get tremendous leverage. And so these options are created to expire the following week. Typically, the FANG names actually have them out about a month or 6 weeks of weeklies for because the FANG names are so popular and so active. That's another advantage of trading options on the FANG names. This gives you an opportunity to take advantage of events and the reaction to events like earnings, Fed releases, jobs reports, etc. And they're available on a lot of the indexes and ETFs, so we focus on the big five FANG equities here. So we talked about the F in FANG for Facebook. How about the A? We'll start with Apple here. And this is what we prefer to do. You can see when we got a buy signal on Apple with the ADX surging up here. In this case, you can see the stock's trading in the neighborhood of about 147.5. We were buying a 142 call, which is a deeper in the money option that has a lot of intrinsic value, say 5.5 points of intrinsic value. We're only paying just under 6 for it. So that means that right away you've got 85 to 90% of the option as intrinsic value. So if nothing happens, we're not getting killed by time erosion. That's important in options. We like to buy those options in the money where we can. On the high dollar ones like Amazon and Google, we don't have that ability because we want to keep our option premiums reasonable, but still tremendous leverage against the underlying stock. And again, here too, look, Apple kind of flattened out here for the second half of that first day we were in the trade. ADX kept rising, that green line going up. That's what we got to see. As soon as it bends down and we're out, you can see where that happens. Right in here on the third day in the trade, we're out. Now, you see in this case, it comes back down. Don't use an ADX rollover as a signal to get into any new trade. We just use it as an exit. There's a lot of other factors that determine whether that thing could keep going or not, but we want to just take advantage of what we call the sweet spot when we get that high consistency run in that ADX. You can see Amazon, before it became $1,000 plus stock, you can see it was giving us a signal here right at the close. These are, by the way, 30-minute bars. So 30-minute bars really help us to take advantage of this. And so you see that here's another example. It dips briefly here, and then it takes back off, and ADX keeps on going up. It went up less quickly through that little window while it dipped, but it did not roll over. It kept going up. And you can see then only when it rolled back down. It's tempting because this is one of our bigger gainers in the past year in our FANG service. We made 168 and change percent on it in just a couple of days. So bottom line is that you want to make sure you give yourself a chance to not take your profits too quickly, but let them turn into potentially, in some trades, the bigger winners that are going to help carry your portfolio. Netflix, here's a great example where we got the upturn in the ADX right off the first half hour's close. And look, most of that session, the stock edged back down. Kind of, most people would probably get stopped out if they were using too aggressive of an option here. But you see, ADX went up a little slower through here, but it kept going up, so it didn't stop us out. The next day, the stock does a quick, hard launch, and then you see ADX keeps rising to the following day's exit. At that point, it kind of double tops and comes back down a little bit. But, we're trying to catch that sweet spot where the speed of movement is. And then Google, kicking off the new year with the January 11:20 strike call, we paid a penny under $9 for it. So that means it would cost you $900 to control a stock that you can see in this case is trading at 11:20. In this case, that's an at-the-money call. But essentially, think about it. 100 shares of stock would cost you $112,000. We're controlling it for less than $1,000. You talk about great leverage. That's what we got. As it ran up into the close, we said let's into the weekend. We don't want to hold it. We went ahead and booked the 39% at the end of that day. Popped up a little bit that next start of the next week, and then immediately came back down. But we basically already said thanks. We'll take the bird in the hand in that case. Our trade alerts are what we call read it to your broker instructions. You can do it yourself, of course, or you can actually have selected options brokers help you automatically get you in and out. Call us at 800 Big Trends for more information on that. But we give you really clear read it to your broker instructions. BTO means buy to open. In this case, this is a prior trade on Amazon, the June week 2, second week. A Friday expiration was June the 9th. We were recommending the 1005 strike calls at $9 or less. $9 or better when you're buying means $9 or less. And then we'll send you exit instructions as well, so you're never left hanging. We always clean up every trade that we recommend with an exit instruction, win, lose, or draw. You've got to have this catalyst. In this case, it's that ADX catalyst with the other filters confirming. We prefer in the money for those names where we can buy them in the money. It gives you more of a stock substitute, or when we buy with an Amazon or a Google, a little more aggressive option, we're going to keep a pretty tight tight rein on it. And so we're going to let the ADX really tell us, though, that it's now over on the trend. And so the trend is your friend until it's not. And when it's not, we get out. We don't hold and hope. This gives you the theoretically unlimited upside potential with no upside cap in profit target. At the same time, when we do see that rollover, we'll take it. I do a weekly video as well, and I'll update all open positions as well as all the big 5 FANG names. So Facebook, Apple, Amazon, Netflix, and Google, that's our focus. You don't have to worry about more than those 5 with the FANG Options Trader program. And frankly, we do the work for you. So we tell you when to get in, when to get out. You then decide how you best want to set it up to take advantage of that. And then you can review my weekly video update for continuing ongoing education. So, I've got multiple sets of eyeballs on this stuff, so we can help you take advantage of every fresh new signal to enter and to exit. For more information to take advantage of this, go to bigtrends.com and give us a call if you have any questions at our toll-free 800 Big Trends number, which spelled out is 800-244-8736, or you can drop us an email through clientcare@bigtrends.com. Hope you enjoyed this FANG Options Trader product review, and we'll hope to see you soon. Keep trading well.